Thank you so much, and it's a pleasure to have almost a full room. So if your friend is still having tea, send them a message to come in, and we're talking all things money. Um, I don't know if we want to invite the panelists yet, or yeah, oh, perfect. So I'm going to have the panelists come on, and we're going to keep it brief but very, very important. So we have our panelists from all across the world today. So we have Helen Nachunye, Senior Program Associate from Capital Solutions in Uganda. Please, let's clap better than that, guys. Come on. Then we have Mr. Stephen Nyagruya from Kingdom Bank. I don't know if he's there. I haven't seen him. But, perfect. Then we have Kennedy Odera from KCDS Kenya. And all the way from Saudi Arabia, we have Mr. Brahim Dawhaj. Great. So we'll get right into it. Should I join my panel or you? Perfect. Hello, panelists. How are you doing today? Good, good. So I know our audience is very, very excited to talk about all things financing. I know we heard some really grim numbers earlier from our chief guest, but not to worry. We have a very able group of people that will really highlight the different opportunities and really drive the point that optimism will really get us through all of these challenging times, and there's a lot of opportunities in the finance space for social entrepreneurs. So I'm going to hand it over to you. Because we're trying to keep time, I'm going to ask you to introduce yourselves and answer the first question. I know we had discussed something a bit different, but bear with me. So introduce yourselves and let us know briefly what your organization's role or initiatives are in supporting social finance for impact-driven enterprises. And we can start with Kennedy here on my right.
Okay, thank you. Good afternoon. My name is Odera, Kennedy Odera. I work for Kenya Community Development Foundation as a capacity building and system strengthening coordinator. I also oversee our financial resilient work for KCDF, which we do within the region. KCDF is a charitable organization, a non-for-profit organization, is an indigenous charitable organization in Kenya, covering the entire country. And we do two major things. One is we do grant making. We work with civil society organizations, development partners to facilitate their development through grant making. And secondly, we do capacity strengthening across the board for both civil society organizations and any other community-led development partner within the country. Thank you.
The question is, what does your organization do in supporting social finance for impact-driven enterprises?
Yeah, for social impact, rather social enterprise or impact financing, we work with community groups, what we call community partners, to kind of facilitate their growth in their social enterprises. Currently, we are working with about 9 partners in our financial resilient work, but in our other programs, we work with additional, I think, another 10. And what we do is we build their capacity, we do mentorship and coaching to ensure that they get the right footing before they start their social enterprise. We also work with experts in social enterprise to ensure that the partners get the right grounding as they start their social enterprise. So we facilitate social enterprises, and we also give seed grants to the social enterprises. Thank you.
Thank you. Good afternoon, everyone. My name is always mispronounced, but it's okay. It's Helen Nacheyune, KY, Nacheyune, but it's okay. I got the hang of it. So I'm Nacheyune Helen, and I'm from Capital Solutions, Uganda. We are located in Kajansi, and we have a skilling hub as well. Basically, at Capital Solutions, we have many solutions for social entrepreneurs, and we have the Social Entrepreneurship Forum. We have a member who is from the forum. She's over there. So this forum is a networking platform for all our social entrepreneurs to collaborate and network. Then we also have the advisory services where we make our investors, our entrepreneurs investment ready. We have the accelerator programs, and then we also have the social investment fund, which I'm going to talk about as the initiative that we came up with to support social entrepreneurs. So the social investment fund was birthed in 2020, and it came from a research that we did in around that same period. And entrepreneurs were telling us only one thing, among other things, they didn't have where to get money from. So we came up with this social investment fund, and it's basically an impact micro fund. It's for social entrepreneurs specifically, and it gives very soft loans just to help you meet a small working capital, pay a worker quickly. It's from $300 to about $10,000. And the interest rate is very small. It's just 2%, and it's collateral free. So you wonder why a normal person will give money without collateral. Funny thing is that social entrepreneurs are not trusted sometimes because their ventures are not bankable, they are not understood. So when you give somebody money with such trust, surprisingly, they've been able to pay this back very well. So for us at Capital Solutions, I think it's one of our biggest innovations, and we are very proud of it. Thank you.
Yeah. Oh, sorry.
Good afternoon. My names are Steven Garuya. Currently, I work at Kingdom Bank. I'm in charge of youth banking. At Kingdom Bank, Kingdom Bank is a subsidiary of Cooperative Bank of Kenya with 23 branches across the country, and formerly Jamii Bora. We are very passionate about youth and women, and what we're doing in that space is that we have mentorship program. We run what we call NFS. NFS is a clinic that we run for our customers and non-customers, where you are able to teach people on how to go about finances. We believe in our bank that it's not enough to give people money, but it's more than that. We give money, but also we are able to teach them how to use that money in the right way when it comes to running business. One key thing we do especially is to show how people to do bookkeeping, record, and also taxation, so that as they run their business, they're able to conform to the set rules and regulations.
Thank you. Good afternoon, everyone. My name is Ibrahim Daud Haj. I am the head of the international department at Arwika Company. It's a Saudi Arabian development company, socio-economic development company working internationally in 7 countries around the world, in Africa, even Asia, and Europe. So basically, in our mission, in our company, centers in empowerment development for economic empowerment for less advantaged group. We are having a few paths for that. So we have for social entrepreneurship and social investment. So we have our own fund for social entrepreneurship and entrepreneurs, and also for investment, coming like a blended finance from different sectors. So we have our own fund designed for this instrument. So we support impact-driven enterprises in a comprehensive way. Ecosystems for blended finance and support with the capacity building as well. So we focus on advancing entrepreneurs in addressing the challenges and issues in their societies through capacity building, and also we offer a seed fund and other investments through our VCs. So we have we have a few programs, so including investment and also the program for empowerment and social innovation, and even we have program for IT and CSR blended finance for development around the world. Thank you.
Thank you so much. And you all work from very diverse organizations, a lot focused on the social entrepreneur. So Helen, my question to you is, from your experience in Uganda, what are the biggest opportunities and gaps in social finance infrastructure today?
Thank you for that question. It's a very good question. The biggest gap that we have is basically who to approach. One of the things that Dr. Joyce mentioned earlier in her speech is that USAID has fallen. It's no longer there. What do? People are running up and down. Where do we go? So the fact that it has fallen is actually an opportunity for us. It's something we have seen that is bringing actually more business to us at Capital Solutions. So the fact that there is that funding gap, people are used to grants, they're used to writing proposals. Now people are starting to initiate their own enterprises. People are beginning to think, people are beginning to come up with things that they had put at the back because they thought USAID will be there forever and nothing else is going to happen to it. So the fact that USAID went down is a big opportunity that we identified. Then also the other opportunity is around financing for the youth. It's quite vague. Then we've also realized that persons with disabilities and refugees are coming up with their own financial solutions. We have some organizations we've worked with, some NGOs, especially persons with disabilities, and they are creating their own circle because they understand their own problems, they understand how money comes in, how money goes out, so they've created their own ecosystem. They don't have to go to a financial institution and they tell them, bring this, bring that. Instead, they are creating their own circles, they're creating their own microfinances, and that is also some of the solutions that they're trying to find on their own. Then lastly, we've also noticed that there's a lot of impact investors that are coming up. Yesterday, I didn't know there was a word for it. It's called Kingdom Investors. I got it from one of the breakout rooms we had. I'd never heard of it. But then I realized we've actually been dealing with a Kingdom investor, but they were quiet about it. So impact investors, Kingdom investors are all coming up. They've come out of the shadow of USAID and they're actually helping people do something, do some impact in their community. So for me, I think those three are the biggest opportunities that in this financing area. Thank you.
Thank you, Helen. And you can hand over the mic to Stephen, and Stephen will tell us how is Kingdom Bank integrating social finance principles into your mainstream banking?
Thank you for that question. I think there are many principles that are in place, but I think the one that come out very clearly, there are two of them. One is inclusivity, and the other one is equity. For the longest, we know that women in our African culture, they have been marginalized. So as a bank, we realize that for women to get financing, there are a lot of barriers that are there for them to access finance. So what we've done, we've come up with a product called Faidi Dada, and this product is purely for women. Any enterprise that is run by a lady or rather a woman, we give loans up to a certain amount without any collateral. For example, there is a product we call Faidi Dada 1, whereby we're able to give you up to 3 million non-secured. As my colleague from Uganda said, rarely will you find financial institutions giving money without collateral. But for us, we have realized that because of our African setting, not many women are empowered to have those security. Even if a homestead or a family has a motor vehicle, by and large, you realize that it is registered by the name of the father or the owner of the family. So what do we do to these women who want to be empowered and they do not have those assets? So we've come up with that one. Number two, we've also ensured that when we are discounting security, we do it 100%. More or less, you find that if you need a loan of 1 million, and probably you have a motor vehicle worth 1 million, many financial institutions will not give you that. They want to discount that security to probably 50%. For us, we are doing it 100%. So if the value of the motor vehicle is 1 million, we'll give you the full amount. We have also made it possible for women to be able to access funds even when they do not have registered businesses. They don't have to have a physical business for them to access funds. So we are also doing what we call personal accident cover, and we have gone as low as monthly contributing just about 5 to 6 shillings. A lady who is running a business and gets an accident when she is in line of duty, we're able to take care of her medical expenses. So that is also a plus for women. And in terms of also young people, we've also used the digital tool to ensure that the youth who ordinarily will not even get any access to credit, by the use of their mobile phone, they are able to get those loan credit facility at very low interest rates. So those two, inclusivity and equity, it's something that we are championing at Kingdom Bank.
Wonderful, wonderful to hear. So Kennedy, you talked about the capacity building that you provide the entrepreneurs you work with. So maybe you can tell us a little bit about what capacity building measures you've seen that have prepared social enterprises for investment readiness.
Thank you. We work with partners to identify some of their capacity needs, and looking at the cross-sections of partners that we worked with, we find that some of these items kind of cut across and also prepare social enterprises to be investment ready. So what we do is we work with the partners to help them develop their business plans, to develop viable business plans. And these business plans they develop models that balances financial sustainability and social impact. It's because when you talk about social enterprise, you must see how are you impacting on the lives of the communities that you serve. And we also work with the partners to look at their financial literacy. How do they engage in issues about budgeting, forecasting, cash flow management, and understanding just the key financial metrics. And then we look at areas around governance and leadership. For an enterprise to thrive and also to make impact, you must have, a board and structures that enhance credibility to the investors. We're also looking at training them on strategic thinking or strategic decision making, looking at team building, and looking at scaling up their social enterprise to achieve more impact. We look at areas around compliance, because if you're in social enterprise, you must be compliant. Yeah? So we look at guidance on selecting the appropriate legal structure, and then ensuring taxes are remitted and corporate regulations are followed, and also looking at developing partnership agreements. We also work with our partners to look at impact measurement. How do you measure your social impact through your social enterprise? Because you're putting in money, you're getting in money, putting into your business, but you're also impacting the lives of the communities that you work with. Then how do you define and measure your impact? So we work with the partners to look at that, and they benchmark these based on the SDGs that are aligned. They align with the SDGs, and also we train them on reporting so that they create reports that are impactful as opposed to generalized reports. We also work with the partners to assist them with the fundraising. How do they fundraise for their enterprises, and how do they engage the investors? The issue of pitching, the issue of engaging the investors, the kind of capital you ask, what informs that capital that you are seeking for. So those are some of the measures that the social enterprises would take, or rather we work with them to ensure that they're investor ready through some of those interventions that I've spoken about.
Great. So we've got a good perspective from the region. We've heard what's going on in Uganda and in Kenya. So Brian, maybe you can talk to us about the unique opportunity that the Gulf is experiencing in deploying capital for social impact, and maybe you can share with us some of the unique instruments or models that are used within the region.
Yeah, that's great. I think through our experience in Gulf countries or beyond the countries that we are working, we found, and also we are witnessing the rise of a hybrid financial system, or financial tools, such as we have combining social finance instrument with religious or faith-driven finance, such as endowments. So we worked in this instrument now it's 3 years. we try to and also combine this instrument with social investment or modern social investment, impact investment model. So we have one model, which is the crowdfunding endowment fund. Is it a platform? It's two models. It's a platform for getting endowment and also donation from the public. And we have a fund for endowment investment. So this fund is dedicated to social entrepreneurs. And also this fund is totally run by investment companies. So only the profit goes to entrepreneurs. So for example, we can say this blended finance or this hybrid model show us the impact of like transforming the classical or the convention charity fund to sustainable fund, because we are running as a fund, as an investment. That's why we are strict. Even with impact measurement, it's very important that we make our consideration. When it comes to the result of this fund, so for us, we started this fund with 10 million. It's coming from public and coming from our partners. So, and open up 5 portfolios for environment, for youth, for empowerment, and also for education and healthcare. Now, there's like, it's I think 3 years ago. So from the capital is 10 million, now we are reaching 200 million US dollars. You can say here we try to build like some hospitals and also the other initiatives. So this kind of things of blended finance, you find it is very crucial to be implemented even in Africa. That's why we are trying to speak and also to have this conversation with our partners. Another thing is also when it goes to blended finance in general, which is like this model combined between philanthropic and public and even private capital to de-risk the investment. So this is it's a big issue now, is the high risk of investment when you invest in social entrepreneurs. I think that's why the conventional institution, financial institution, they don't like give loans for entrepreneurs for this, I can say, this matter. So when we have this blended finance, is running with this committee from public and private and also non-profit and philanthropic, we give like the credit to social entrepreneurs to get this fund and also to decentralize the risks into social enterprises. In particular, affect the fragile market. So this is very important to explore and to go beyond the classical way. Another tool that we are exploring, and also we have like a pilot in Indonesia, it's social impact bonds. It's very important. Also, development impact bonds is launched by our partners from Social Development Bank in Indonesia. Is to settle up to mobilize and upfront capital from investors and only play with them in social outcomes and achieve. So now I think we launched like 2 circle of bonds. Now we are getting a profit for them reached 7.5% last year. So which is very prominent to explore as well. And when it comes to technology, as I mentioned, we have like 3 models of technologies, the crowdfunding particular and also our VCs. We have the first one is under the blended finance through endowment. And we have like classical way, we have a platform, a global platform that we are looking to also extend here in Kenya. If we have like some partners to work with us, is to really like adopt the model of crowdfunding. It also allows social enterprises to tap into community-driven funding. It's coming from the community, from the funders, from even the investors, to democratizing access to capital. So, and also we are having a few other models, but you can say these 3 models are very, very prominent and also potential to explore. Even we have like a second, we tried to have like a classical fund for social investment in Saudi Arabia, but it's very local. We didn't get the chance to make it global through the many barriers, but we are also trying to explore the value-based financial instead of equity and fixed payment that investors receive a percentage of future revenue. It's like the revenue based in the achievement of entrepreneurs. So this aligns well with the cash flow realities and of growth of social businesses depends on that. So yeah, this is a few tools that we are, I think, already used and also in the pilot that maybe can explore and also develop here in Africa and even in Kenya as well.
Great. So for all of you to do the incredible work that you're doing, it's really important that the policy allows you to do this work. And this morning we've talked a lot about policy and our vision of what it looks like. So maybe that's something I can throw back to you, the panelists, and maybe you can tell me what is one bold change or policy shift that you would believe would unlock the more financing for the social impact space in the next 5 years. And we can hand it over back to you, Kennedy.
Okay, thank you. I believe in Kenya the major policy shift is the enactment of the Public Benefit Organization Act that was enacted in March this year. And that allows civil society organizations and non-profits to venture into the work they do, but also get into the social enterprise work. Rather invest, sometimes back NGOs were not allowed to invest or to do business. So this particular act is allowing non-profit organizations to now do business. And we, as KCDF, we were lucky to have some funds to work with the government to make sure that the sensitization on the new policy is done across the country, and also developing guidelines on how will this roll out, how will this be rolled out. So all the NGOs, non-profit are expected to, move to public benefit acts because now we don't have the NGO Act anymore. So we think that is a big shift, and we hope that the non-profit, the civil society organizations will jump into this and see how do they strengthen their social enterprise based on this window that now we've been given by our legislation.
Thank you. Helen?
Thank you for that question. The first policy shift that would really push our entrepreneurs forward is recognition. Recognition is most important in our country. So we need to recognize that social enterprises are a standalone. They are not an NGO, they are not a business, they are in between. And the fact that you recognize them as in between, a hybrid, they are creating impact is already enough done. So what the government did to react to this was basically add a clause in the NGO Act and say that under Section 46, you can do business as long as the money is plowed back into the NGO. It was enough for some time, but now the need has changed. So what we are doing as Capital Solutions is working with our partners, GIZ, and they are helping us create a framework, a policy framework for social entrepreneurs. And in this, we want recognition in basis of taxation. We can't pay the same taxes as a typical business, yet we are trying to create impact. All right, so it's around taxation, the bidding, the tendering process is a bit difficult. You can't tender, government doesn't understand who you are. You say you're this, yet you're that. So we also need that recognition given to us in terms of bidding, as well as the registration. In Uganda, you're either registered as a guarantee or company limited by shares. So we want that social entrepreneurship recognized, given the same facilitation as well as others, and then we're able to thrive in our country as mission states. So the biggest policy shift for us would be recognition, and then we can move forward from there.
As for me, as a champion for the young people, and at some extent I also deal with the women, I would say that the biggest policy shift for me, what I would like to see is many financial institutions shifting from the collateral lending to character lending. This will unlock so many people who have potential to do business, but as long as they are going to be locked out because of those measures that they must have A, B, C, D, then always they'll be locked. So if we are able to have so many financial institutions moving away from that collateral lending to character lending, I believe we are going to unlock a lot of potential.
Yeah, that's great. I think, from my perspective, maybe I would be a little bit extremist. For me, I don't think we should like work in the policy in the first place. For us, if you ask me why, because we have like now 5 or 6 years doing this work in many countries. There is no policy supporting what you are doing. Even in Gulf countries, even in Europe, always we have this issue. Yesterday, I told my colleagues in one session that when we started one of the projects in, I think, 2019, Saudi Arabia, when we started our fund of social investment, we went to many ministries and even ministries, including Ministry of Housing. We got like a fund from one funder to build like a few social departments in that, I think it's in rural area. So the first question from the government is, who are you? What you are doing here? It's not our business, we cannot support you. So we tell them, okay, we go. So we struggle, and we did it. And we succeed. And now, I can say the majority of ministers and ministries coming to us in many countries, guys, let's do it together, after 5 years. So what I want here to say is, for us, as social enterprises and entrepreneurs, we need to work even beyond any policy. We have our, I think, the way how we can show ourselves and the result. So when we show ourselves and we get the achievement and the result and successful story, so the others to come to us. The government, in the end of the day, should come to us and they make like the policy that we are looking to. So this is what I can say. But when it comes to policy, if you found like from here, I think from the government can support this initiative, because to take it like a shortcut route, it's okay. But what we need to do is like to implement our visions of social investment, and especially mainstreaming of social impact or social finance instrument into national economic development strategies. It's very important to be discussed with government and all the stakeholders to be in our development strategies as well. Particularly by creating social investment sovereign fund, by blending finance and so on. And also we need to think with ecosystem view, as we mentioned, my colleagues mentioned. So we need to bring all the stakeholders coming from public coming from private, and even non-profit should like take the rule and take this initiative to work together to make the vision that can help all the stakeholders for the benefit of the country.
Thank you so much. And what I'm hearing from that is that collaboration is key, which is why we're here all together to network and to learn from what we're all doing with each other. So I've been given some indication that our time is almost up. So what I'm going to ask you to do is, in 30 seconds or less, give your parting shot to especially all the social entrepreneurs in the room. So I'll hand it over back to Kennedy and we can work downwards.
Okay, thank you. I think the social enterprises, entrepreneurs in the room, we need to make sure that we have social enterprise models that work for you, for your organization, and impact the communities that you serve. Because the social enterprise should impact the communities, because we do community-led development. So what my parting shot is that, can we impact the lives of the communities through the social enterprise that we do as organizations? Lastly, just another 2 seconds. Tomorrow we'll be having a session, a masterclass, as KCDF will be leading a masterclass on social entrepreneurship as a pathway for CSO sustainability. You are invited, and we have sweets. Karibuni.
That's a bribe. That's a big bribe. Thank you. My parting shots, I won't fall far from what Mr. Odera has said. Basically, I'll just say, let's partner, let's collaborate, let's work together, let's create as much impact as possible. We are here to do business with our hearts, and there is nothing wrong with that. However, at the end of the day, if your dream doesn't scare you, If your dream doesn't scare you, it's not big enough. Thank you.
As for me, I would say that the future is bright. I would say that present is already bright. I would welcome you to Kingdom Bank so that the things that we are speaking theoretically, you can have them practically.
My word to social enterprise entrepreneurs is start by clearly defining your impact model. This is with measurable outcomes and also with your framework for impact measurement. This is the first thing. I think why? Because the funders increasingly looking for data-driven impact, not just like a patient, is like a milestone to work. The second thing, explore hybrid finance options. Don't rely in one source of financing. Finally, surround yourself with mentors, experts, and also network and also partner with the others.
Wonderful. Let's give them a huge round of applause. They have all the money. And thank you so much to our panelists for really engaging with us and keeping time. I think we've done really well for ourselves.